So as somebody who builds and buys in the branded hotel space, what are your takeaways from, it's a new year, we get a new wave of new brands.
Yeah.
Like clockwork. What do you think of the, Hilton's launched a brand, Choice launches a brand, just yesterday. Do you see any sort of trends in that? Are you excited about the directions that the branding company's moving in? A little bit nervous? Are we at the too many brands point? I mean, what's your overall takeaway of the branded space?
It certainly does feel like there's too many brands, and we're in a situation whereby I believe that there's a real war on loyalty that's happening, where the brands feel like they need to be able to have a broader ability to get to consumers, right? To pick their brands versus other brands. You have companies like Marriott, obviously, that look at this as not only competition from existing brands, but also Google and Amazon and others in terms of the customer itself. I think it's concerning for our industry to make sure that when we're doing this and kind of adding brands, that we're not cannibalizing kind of the systems that all are in place. And we're at a place right now where it's too early to tell. And it's too early to tell in terms of what these loyalty systems at Marriott, at Hilton, at other brands are really going to mean in terms of their ability to deliver revenue to this wide breadth of brands that the consumer is just starting to kind of understand what they are. And I'll say this, that I think we spent a lot of time thinking about what will be the best brands of the future. So if I take a 10-year kind of life cycle from a real estate standpoint, what are those brands that are going to be the most relevant 10 years from now, right? And there's a lot of digging and data and information that goes into that. I'll also say that out of our peer groups that we spent a lot of time with, and again over the last 25 years, more and more of them are beta testing independent hotels and other types of alternative lodging, just to kind of compare and contrast that to the traditional branded lodging. And that doesn't mean that they're not buying franchise agreements and things like that, but I think that there's a real curiosity around what does distribution look like in the future? What do you pay for that distribution? What are going to be the real loyalty drivers for consumers kind of book? And I think that curiosity is very helpful, because I think it makes us all that much better.
Yeah. I guess to a piece of that question then is, as somebody who operates in that space as an owner, when you're looking to buy or even build, you just purchased at Hilton Garden Inn property, how much of that is belief in, and we're just using this purely as an example or hypothetical, how much of that is belief in Hilton Garden Inn as a brand versus Hilton or even Honors as the brand driving it? I mean, how's, in the mind of an owner, where's that equation lie right now?
Yeah, look, it's a good question. We had asked all the time, like, how do you choose brands and what things like that. I think it goes back to, you have a couple of brand companies that you trust and have relationships with us, and kind of going forward, and we do that, and those relationships have been built over multiple decades. As I kind of think about it, we were talking about Atlanta before, so Vince Carter just started his third decade, and
which is insane.
It's awesome, right? It's so great. He's such a good guy. But Noble just started our fourth decade in the business. So we started in '93. So we started fourth, and it's fascinating to think about. But then I think about the relationships that we've created over time. So those trusting relationships with the brands, it starts there. Okay, so then you go into a marketplace, and then you kind of make an easy. If you're building a hotel, it's kind of pretty simple. How many Marriott branded hotels in the market? How many Hilton branded hotels in the market? How many Hyatt? How many of those different brands exist in a given marketplace? And then what's the right product to put based on where you think you can get the most out of that engine in kind of the right way? So that's how we do it. When we go buy assets, it's actually a little different, in that we're targeting markets that we want to be in, and based on the markets and locations, it's ultimately if it fits one of our brand matrix, So for us, it's not, gosh, it has to be this brand or this brand, but if it's in this brand family in a market and on a street corner that we believe is representative of where we want to be, that's kind of how that decision gets made. So it could be anything from a Hilton Garden Inn to a Courtyard to a Hyatt House to an AC to whatever.
So you mentioned peers looking at alternative accommodations. Is that something you ever see Noble moving into? Are you going to get into the glamping space at some point?
That's fun. That's really great. So we just did our first independent hotel at Yale University, and we're using that as really kind of a beta for understanding, both from a design standpoint, how we're creating spaces that aren't really, there's no brand standard around it.
Yeah.
But we're doing it from a functional way where we believe that we can have a check-in experience, a guest experience that is really meaningful with lower FTE counts. We're also doing it in a way where we can kind of deliver certain kind of cross-branding, like with local great restaurants and things like that, where we can do some interesting things there to change kind of the guest experience. And then we're also looking at different distribution channels, out of it, and going to test that out a little bit. And a big part of that is just, again, curiosity, right? Understanding, and and I think I believe that there's a lot of conversations going around with owners, and they're talking to Airbnb and Domio and Lyric and Sonder and just kind of understanding those businesses and how they work against the traditional hotel landscape. And again, I believe that that's all very, very good for our industry, because we tend to remain fairly insular around things. But there's so much that's going on that it's good to kind of understand what everyone is kind of doing, how they're thinking about it. And again, you look at it in a 10-year time frame. That goes relatively quickly, but things change pretty dramatically during that time.
So you mentioned how the 10-year hold period kind of insulates you a bit from the cycle-to-cycle worries. But what does keep you up at night? What's concerning to you right now about the state of the industry?
Yeah, it really is the fact that the industry. There's battles being waged on a number of different fronts. So from the brand side, it really is about loyalty and distribution, and we get on a public company standpoint, which I've been able to kind of ride shotgun and on the board of different branding companies and the like. It really is about being able to show to the public markets your growth story that drives your EBITDA multiple and drives everything that shareholders really value there. That's not always consistent with kind of the owner paradigm, right? In terms of how do you make money at the profit level.
Absolutely.
There's a part of it that really is, right? Revenue system, et cetera. But taking cost out of the system and how slow technology is in which to adapt. I mean, we really should be at a place where all brands have dynamic pricing. All brands have the ability for guests to opt out of housekeeping and get whatever, whether it's points or breakfast or this or that, kind of as a part of all of that, to change the structural model of the business. The fact that that's not happening at the speed that I believe that owners truly want is concerning. And so in terms of keeping me up at night, this has been a profitable business. We've all been very successful for a while. But unless we do some really transformational things in the near term, that profitability matrix will get compromised, going forward. And time is not our friend as it relates to that. We're real estate heavy, and we're relying on others to kind of control our revenue streams and drive things, et cetera. It's very expensive when you pay a brand 10 to 12%, you pay an OTA 10 to 12%, and it just starts adding up. And so I think there's got to be some fundamental structural changes in our business to allow us to continue to be profitable, kind of for this next generation forward.
Well, on that high note,
yeah.
Thanks a lot, Mit.
Thank you. I appreciate
the
it.
time.
Thank you as always. Thank you.